this week's crypto recap. We cover the fake Bitcoin ETF pump. We get an update on the latest in the SEC lawsuit, and of course, we look at what else happened in crypto this week. We discuss all this right now with Nick and Matt from the Collective Shift team in our weekly recap. Actionable insights and a breakdown into the crypto market, all in under 30 minutes. So, Matt, welcome back from your vacation. Let's take it away with the markets first. What does it look like now?
Hi, Leon. Good to be back and good to be seeing crypto markets moving upward. We have Bitcoin surpassing 30,000 for the first time in a number of months. It is actually, at the time of recording, 30,700, so it's up 10% for the past week. And ETH, a bit less of gains. It's up about 7% for the week. It's nearly at 1,700. So once again, we've seen this scenario, as we've seen in recent sort of months, of Bitcoin leading the way. What do we mean by that? It sort of is gaining the most relative to all the thousands of other cryptocurrencies. And for that reason, we've seen Bitcoin dominance continue to increase. This has been one of these stories of 2023 so far. And we've actually seen Bitcoin dominance in the past few days actually rise to its highest levels in 2.5 years. So a very notable sort of data point there. And then similarly, we've seen exchanges, sort of another sort of metric that we do track closely is sort of how much Bitcoin are people holding on exchanges. And that has actually fallen to the lowest level in more than 5 years now. So again, it's more of a sign of just people who are happy with the Bitcoin that they're holding, sort of just keeping it safe in what's known as cold storage. And that's sort of a signal that they are here for sort of the long term. Sure, if Bitcoin price rocketed up higher by 2 or 3x, maybe they would send some money back to, or some Bitcoin back to exchanges. But we've seen a big exodus from exchanges, which is another strong signal to us and another really bullish long-term indicator. So yeah, it's been quite a big volatile week in the markets in general, over in the bond markets. Pretty boring stuff over there, but I guess to really be brief, there's been some of the biggest events that have been happening since around 2007 in the past week or so. Which again, we're sort of writing a bit of content about for Collective Shift members because it does have some sort of relevancy for Bitcoin and cryptocurrency. But a bit of green to start the week is always nice.
Yeah, that's right, mate. We love a bit of green in the market here at Collective Shift. Everyone's in a great mood. Let's get to the rest of the news, I guess. So, Matt, as you were alluding to before, and I think Nick is going to be covering this as well. So we did hear some fake Bitcoin ETF news come out. And it has been quite a big controversy by one of the biggest news organizations in crypto. So Nick, I know people were quite upset at this, but what's the actual story behind this?
Yeah, thanks, Leon. We saw Cointelegraph, which is one of the bigger, crypto native news outlets out there. They mistakenly posted on their social media that a Bitcoin spot ETF was approved. And as soon as that went live, we just saw the markets go a bit parabolic in the matter of, I think, less than 10 minutes. Bitcoin surged above 30,000, 10% increase in probably minutes, really. And then quickly came back to earth as soon as, the news was debunked. So it was pretty major because we really question whether this is a sign of things to come in the market, whether this is what's going to happen when a possible inevitable spot ETF comes. Or whether it's just a bunch of liquidations that maybe have cascaded the price upwards.
Yeah, and Nick, I mean, we did talk about this previously in the last, I think, week and a half as well. That is this what we should expect when the Bitcoin ETF does actually get approved? Do you think we may get, and I know we don't do price predictions over here at Collective Shift, we're more of a long-term organization here, but is this indicative of what could actually happen? I mean, an 8% move in, 1 day, is that possible? Can that happen?
Yeah, I would always be in the camp that no matter how much this has been talked about for the last few years, that inevitably, I'm sure people would get super excited about this news and, Bitcoin would inevitably, surely, probably go higher in price. How much or how long that happens, I think that has, is a whole nother story. As we saw with other news earlier this year, whether it was the Ripple case that was the big verdict, whether it was the initial BlackRock entry into filing the application, these things spiked high in price, but then I think momentum really caught up and they slowly reverted back to, I guess, where maybe you can contribute to buyer apathy. So that's probably how I would stand, but I'd be very shocked to see anything, other than that happen. But you also have to question how, I guess, how much of this is priced in. After all, we're seeing slowly the SEC change its posture towards some of these ETFs, with Gary Gensler, sort of saying that he's engaging with them still. We're seeing new applications consistently be filed, and we're even seeing, I think Kathy Wood come out with her ARK Invest ETF and said that it's only Gensler that's in the way, that a lot of the SEC is actually pro this ETF. So, slowly but surely we'll get there, and really keen to see how it unfolds, or how excited people do get in the market.
Yeah, and Nick, and speaking about all of this unfolding, and speaking about BlackRock itself, they're one of the largest ETF issuers out there. Their CEO Larry Fink actually came out and said something pretty critical in the market, and I managed to catch that video myself. But I want you to give us an idea. What did you think about what he said, and what did he actually say? Did you manage to catch what Larry Fink said?
Yeah, so Larry Fink is the CEO of BlackRock, and he's quite infamous for being anti-crypto and Bitcoin back in 2017. He come out and just said that this crypto or Bitcoin and the price movement wasn't something to scoff at, and he was of the opinion that we're going to see a rally post-approval. And he said this was because it's like a flight to quality, putting Bitcoin and crypto in the same sentence of things like gold, especially in this turbulent time. So for someone who is, called Bitcoin an index for money laundering, he just continues to do this backflip. Of course, now he's got, he's incentivized to talk pro crypto because he's got an ETF, that will get a lot of, management fee or whatnot. But, just such a big change of heart. I'm not sure about you, Matt, but it's just probably one of the biggest stories this year has been this change.
Yeah, that's right. It's one of the biggest kind of backflips we've seen, going from not rat poison, as someone else said, but going from an index of money laundering all the way to, hey, it looks like a good storage of wealth there. Matt, what's your take on this?
Yeah, I would just add to that. I think, you could kind of understand it a bit more if crypto had an extremely, positive year. I suppose, yes, Bitcoin and ETH are up, 30% and then 70%, I think, for Bitcoin. Like, yes, you could say it is a really good year, but just the whole sentiment on the space is still pretty down. Not many new people entering. And look, that's why I think it's most surprising about this Larry Fink and BlackRock CEO sort of 180, is because things haven't really changed that much since the FTX, collapse, and crypto is sort of has a bad name over it. Now, that's what's been most surprising to me, to see this change in sort of, posturing and commentary from Larry Fink. So yes, I think he is talking his book, as Nick sort of said. But nonetheless, I think it's still a sign that he himself is confident that ETF will be approved, which again is good for all of us as just everyday investors in Bitcoin.
Yeah, that's right. The least we can do for everyday investors is just follow the money, follow the big people. What do they say? What are they actually doing? And if he's doing something like getting a Bitcoin ETF approved, Jesus Christ, we're in for a ride. Now, let's shift gears, my friends. Matt, so let's go ahead and talk about the SEC and the Ripple lawsuit. I know there has been an update in that little section of the market. It has been a long time coming. It's been a battle back and forth, a tug of war. What's been the latest updates with the SEC news, man?
Yeah, after a number of years, we saw the other month, Ripple and SEC, long-standing lawsuit and court battle finally sort of came to an end with an initial sort of judgment, or not to an end, but closer to the end. And we saw a partial victory, but most of the points were actually won by Ripple Labs, and it was sort of celebrated by the market. And XRP, from memory, actually did rally quite a bit. One of those sort of points that was sort of open to interpretation and didn't really have a judgment, it was sort of put to a court date. That actual point or sort of topic that was still in contention and without a judgment, actually turns out last week that Ripple and SEC had actually sort of reached an agreement on this particular topic of this particular sort of point of law, which was still to be heard out in court. You may ask, why did they reach an out-of-court settlement? As you said, Leon, they've been battling each other, going to and fro for a number of years, these two entities. And, it is likely that the SEC is sort of just, in my opinion, and just through reading different lawyers' sort of opinions of this, the SEC is sort of been happy to sort of concede this and just to, shake hands with Ripple Labs, because now this point is sort of removed, if you will, from this entire case. Now the SEC actually will be able to appeal this decision. The overall decision of the case, which came out a couple of months ago. This has sort of been a blocker with the courts sort of saying, hey, this final point that is unresolved, you two actually need to go through court, wait for a decision on this point, and then you can maybe consider appealing. Now that roadblock is out of the way for the SEC, so it's widely expected that they will come out and appeal certain points of this Ripple case. So we saw an initial sort of rally by XRP off of this news last week. However, I think once the market actually digested what that actually meant and the likely scenario that would mean for SEC, is very much looking like appealing this case, not guaranteed, of course. We saw XRP sort of then sell off and just go along with the market. So a bit of a quick update there, just to sort of reiterate as I finish, like why any of this matters. This sort of Ripple Labs and SEC case has sort of been seen as representative for, even though probably isn't a great description, a lot of people see it as representative of sort of the US's sort of opinion on whether cryptocurrency should be deemed securities or not. As I said, that's sort of, in my opinion, not really a fair assessment, but I think the market has viewed that for a long time as, since it's been going for about 3 years, the market has sort of interpreted this as sort of representative of whether the US approves or doesn't approve of crypto. Oversimplification, of course, but that's why I think it's important to just keep on top of this case here. So that's the latest in terms of that.
Yeah, and it seemed like Library as well, before this whole Ripple SEC thing, was also the pinnacle of, this is what the US is going after crypto for. And then it went on to Ripple, and now, they had this little win. So it does seem like superficially it may be a good thing, but I guess the battle is not over. They've won this little section in the battle, but the whole thing is still not over. The US is still going after crypto, as far as I know. So let's end it there. We'll keep an ear to the ground in regards to this news, and we'll keep the Collective Shift membership updated on this. But let's move on to some social media news, my friends. Matt, I know Reddit, I am a user as well. Nick, I know you are a Reddit user as well. You did have some moons before. I didn't have any moons, but there's been some updates with Reddit itself. They're scrapping some of their community points. Matt, are you on top of this story? Why are they doing this?
Yeah, so this has been a sort of a pilot or a test, if you will, by Reddit. They've been trying to make a community rewards points sort of system, and they have been experimenting with having this sort of being used on blockchain technology. They were using an Arbitrum sort of blockchain, which is sort of tied to Ethereum very loosely. They've been using this for a number of years now, and they've finally decided, hey, we're not actually going to go ahead with this anymore, and they're winding down this whole, I suppose, blockchain-based community points system. So why did they do this? A big reason that they cited sort of in their post or in their announcement was really the regulatory just uncertainty. Of course, Reddit is a US sort of founded company, and a lot of US sort of users and team members, and they just didn't really see the risk reward sort of paying off as they go ahead, I guess, with their business and trying to figure out ways to sort of reward their communities. So yeah, a disappointing sort of bit of news there. I guess the big takeaway for me is it's a disappointing result in terms of when you look at the potential sort of use cases of blockchain technology and maybe examples to point to when you're trying to teach people about blockchain. This was always a decent one to sort of refer to. But you've got Reddit saying, maybe this was actually technically okay to do, but they sort of just didn't really want to go ahead because of regulations. We do know here, of course, Reddit is still in connection or using blockchain technology in other areas of their business. I know that they have these profile pictures that are tied to, or that are sort of representative of NFTs, and they are, I think on Polygon or if I'm not mistaken, last time I checked. So that is sort of encouraging that they're continuing with that. So I guess that is some sort of silver lining.
Yeah, that's right, Matt. I really echo your sentiment there, where it is a little bit disappointing where, they're experimenting. They're an organization in itself. They're experimenting with new technology out there. And simply, even if the technology is good, but the regulation is not, they do not feel safe as an organization to be able to keep going through this pathway, right? They just can't, because it's too dangerous for them. They could end up being targeted behind it. So as a cryptocurrency, community, that is not something we want to see. We want to see innovation, and we want to see it spurring across the entire community. So it does make me a little bit sad. But at the same time, one person's gain or one person's loss is another person's gain. We could have seen like how this could actually be implemented in other social media applications, and someone else may take up that mantle. So it's just experimentation in this space. We'll see where it leads at the end of the day. So Matt, thank you very much for that update. Let's go to Nick, a crossover to Nick, my friend. Let's talk about the New York Attorney General's office, which is now suing Gemini, Genesis, as well as DCG. This is a huge lawsuit, isn't it? There's a couple of industry incumbents in there. What's the update with this?
Yeah, this is one that Matt and I know, have been sort of loosely following and reported that we were hearing bits and pieces about sort of cloud over some of these organizations and whether they may face serious charges over maybe the way that they were handling their businesses. So we saw Gemini, which is one of the largest US exchanges, they were sued essentially for misrepresenting some of their risks, that they have a Gemini Earn program, which they took customer funds and gave them a yield, and they used Genesis and DCG to do this. So I think as well with Genesis, they were accused of sort of misrepresenting their solvency, and we saw DCG, which is the company that owns Genesis and is the holding company of everything, they're dragged into this further. So at the end of the day, it's pretty relevant for the markets because these are some of the biggest actors in the space. DCG is probably still considered a top 15 crypto company, maybe top 20, and they're the creators of the largest Bitcoin trust, which is run through Grayscale. So a lot of really big names here, and maybe this can provide some certainty in the market for these big names who may be forced to wind down their operations, who may slowly exit. Hopefully we don't see anything too nasty in terms of customer funds or anything like that, but just one of those gray clouds that was hovering over the market that had some sort of resolution now that we know that they're being sued.
Now, Nick, this is quite a big story, I would say. So do you think DCG is in a bit of hot water here with this kind of news? And could this actually impact the rest of the broader crypto market? What do you think?
I think the most tangible reason that they may be able to maybe sell off some of their parts of the businesses. So they've got Grayscale, as I mentioned, which is probably their most profitable and their biggest holding company. Maybe we might see a situation where maybe they take longer to get approved, their ETF conversion, or maybe we might see things like CoinDesk, which is one of the biggest crypto publications, being sold off, which is in the current process of that now. So hopefully nothing too nasty, considering that DCG has sort of faded slowly from being one of the biggest industry players in recent years. Certainly maybe if this was 2017, it would be a whole different story, considering they were one of the behemoths of the industry.
That's right. Times do change. I remember they were pretty big in this space a while ago, but now they're clouded, lots of clouds over them. It doesn't look as safe for them as it used to be. But yeah, all good, mate. Thank you very much, Nick, for that update. We'll keep our ears to the ground, as always. Now, I think, Nick, before you go, I want to chat about some altcoins. I think I'll hold some Uni tokens myself. I think something did happen with Uni token. Something to do with a fee switch. I didn't catch the entire news line, but what happened with the Uniswap fees?
Yeah, this was, everyone talked about a fee switch happening on Uniswap, but it was the fee switch that maybe some people weren't expecting, where the Uniswap Labs team, which helps create a lot of the front end and a bunch of different products that uses the underlying Uniswap protocol, they turned on a fee switch to use their front end application, their front end sort of service. So if you want to use Uniswap, a lot of people go to, the official Uniswap, area. And, if you use some of those cryptocurrencies such as ETH, USDC, you'll be charged, I think, 0.15% for doing so. So if you go through their official channels, you just have to pay more. And this is where the fee switch comes in. And that goes to Uniswap Labs and also to, I guess, the development maybe of more Uniswap products under that banner. A lot of people were perhaps a bit annoyed because there's been a very big contention in the space about more value accruing to the Uni token. So this fee switch means nothing for the Uni token, and we're still waiting for a fee switch to happen and any sort of revenue to get funneled through the Uni token. So I think for people who were hoping that maybe a fee switch will be turned on, didn't get the news that they wanted.
Yeah, and Nick, and this is something that a lot of participants in the market really need to know about is the utility of the token that you are holding or that you're trying to acquire. What is the actual utility? Does it accrue value? And in the case of the Uni token now, which is why people are upset, it's not actually collecting those fees. At least the Uni token isn't. So yeah, this is really important for some members to actually know what tokens you're getting and if they're getting any value to them. And the last thing, Nick, I wanted to really make sure members kind of understood here is there's a difference between Uniswap, which lives on the blockchain, as well as Uniswap that's on the user interface, the front end of it, or the website. So the website one is actually the one that's collecting the fees or charging you 0.15%. Whereas if you're a blockchain whiz and you don't have to use the website, is that right? You can bypass the entire fee on the front end and just go and use the blockchain.
Yeah, that's correct. And that's also one of the good distinctions to make if there is ever any, I guess, censorship or you're banned from using maybe the official Uniswap front ends. That's what I think the value is that a lot of people do forget is that Uniswap can't really be turned off from the back end, because it lives on the Ethereum blockchain, and you can access the protocol, in a way if those official front ends are closed off. So that's a really important distinction, especially for our listeners to understand.
Yeah, most definitely. And it's pretty powerful stuff, I think, to be able to turn off the front end, but people can still use the back end. You just have to figure it out how. And we know people in crypto will always try and figure it out how to do it. All right, let's move on, my friends. Let's talk about the Australian Treasury Department, which is now proposing a new crypto licensing regime. So I'm not too abreast of this. Nick or Matt, do you guys know what's happening with the Australian Treasury Department?
Yeah, I think last week it was proposed a new crypto licensing regime, basically just how crypto exchanges who want to operate in Australia, how they're going to take care of like custody of users' sort of funds and what their holdings are, things like that, and a lot of different rules to do with, I guess, just complying with the expectations of, the Australian regulators, similar to what you would see with other sort of brokers and other sort of exchange operators that aren't to do with crypto. So good to see that is sort of progressing. I think these proposed licenses, this proposed licensing regime came a bit later than expected, but better late than never. So they're sort of putting it out for commentary from the industry to get feedback on it. And there is a hope that that legislation will be drafted in 2024. So I suppose that will be the next step there. But I guess bottom line is things are progressing, and it's good to see the Australian government still putting in resources towards, I guess, progressing and making the crypto industry here in Australia safer for, I guess, everyday users, and then also more attractive for maybe, international, firms to really expand into Australia, or even in the best case, even move over their operations to Australia. So, progress there, I suppose, at the end of the day.
Yeah, Matt, I think it's actually pretty great news to have a standardized practice across all of Australia, so everyone knows that this is the set of rules you have to abide by. So we don't have another FTX or Cryptopia or another exchange doing weird stuff with our funds and not being compliant to the space. And that's not what we want, right? We want to progress the entire space. So better later rather than never. So Matt, I think I got one more question for you. I think you are keeping us on track on the SBF court case. So I think it's been about 3 weeks, give or take now. Nick and I did discuss this in the last 2 weeks. So has there been anything new that's happened in the last week for the SBF trial?
Yeah, just sort of loosely following this, more so for anything that is shocking that comes out that surprises the market. But I suppose, did anything happen last week that was really shocking? I would say no. It was sort of just in line with the market sort of had already sort of suspected or knew about what the inner workings of FTX were. And there wasn't really any much market impact from this trial in that third week. So I think that sort of period of giving evidence from the prosecution side is over. They're going to have a bit of a break now. And then from what I remember reading, the defense is then going to come out after that once things get underway again on October the 26th. So a bit of a break in the coming days, which is nice.
Yeah, that's right. And this whole trial is turning a little bit into gossip, he said, she said thing. We already know what the giant impact is. FTX was bad, and we know what tokens they hold. So I don't know what else is going to come from it. Just a bit of gossip and just a bit of, socializing in the space. Nothing really critical, I would say, unless something damning comes out. Then, everyone cares. Let's move on, my friends. Let's talk about some of the last section in the entire podcast, my friends, this week. We're going to be talking about things that the team found to underappreciate or overappreciate in the market, things that we think went under the radar or was way too hot this week. So, Nick, you take it away. What did you appreciate or overappreciate in the market?
Thanks. I definitely overappreciated, I think, the role of cryptocurrency, that's used for illicit purposes, whether that's money laundering or by some bad actors. Because I was doing the news cycle a bit where it was labeled, crypto servicing terrorist organizations. And I think I saw a few US senators come out and really talk about and try to petition a lot of different politicians to try and take a more active step to try and reduce cryptocurrency's impact, on financing some of these organizations. Chainalysis came out, which is a leading blockchain analytics firm. They come out and said that the reported, I think it was 80 to 100 million of cryptocurrency that was used by some terrorist organizations, the Hamas, that's currently fighting a war at the moment, come out to be only about, I think, $500,000, less than $1 million, that was actually used by them. So I think it was a case here where a lot of mainstream media, Senator Warren in the US, really tried to use this and show, all the bad things, I guess, crypto could do. So I thought it was definitely overappreciated. So it was really good to see Chainalysis come out and debunk some of these because, I think the Hamas actually come out and said, don't use Bitcoin, to finance them. Because as we all know, it's on the blockchain. It's very public. And they actually said to stop doing it because they were actually being identified by law enforcement. So if anything, crypto probably did some good because a lot of these people who were not smart enough to realize their trail on the blockchain actually probably got found out to be, servicing terrorist organizations because they could see where they withdrew the money to and how the funds flowed. So interesting one there that was doing the rounds of, mainstream media. That was definitely overappreciated. And I was glad we had, good firms like Chainalysis to debunk this.
Yeah, Nick, that's pretty impactful there because some people didn't really like Chainalysis for a while because they're saying, oh, you're demystifying crypto and it's not anonymous anymore. But hey, this is the way we have to go. And if you can stop terrorists from getting some money, then yes, we are in a better, safer world. So that's really good news, man. Thank you very much for sharing that. Matt, what did you have for this week? What did you pick up?
I think underappreciated in the end was this Celestia Airdrop, which, I know Nick and I have been covering. We sort of been covering tokenless projects for, quite a while now on the platform, and Celestia had been one that, Nick in particular had been highlighting. They finally had their airdrop claim in recent weeks and had only about a 3-week period to claim. That came and went, and it turns out anyone who did, was alert and aware of this claim window actually ended up getting over 3 times more than their initial sort of estimate. Why was that the case? Because it only really turned out that I think about 30% of, I suppose, the eligible sort of pool of tokens that was going to be distributed to, people who were using Celestia and doing some other things over the past couple of years that they wanted to reward and acknowledge. Only about 30% of those addresses actually, bothered to go onto the website and claim their free airdrop. So in that case, the people who did got all the rest that were unallocated. So a really, really big, I suppose, windfall to those people who were still sort of, battling this crypto bear market and were there to, I guess, take advantage of that opportunity. Because, it was a nice, I suppose, in terms of dollar amount, a nice little, extra boost to the bank account for those people before the festive season.
That's right. We love a little boost to the bank account. And look, for the Collective Shift members out there, Matt did actually cover this 4 weeks ago. So as it was actually coming out for you to go and claim your airdrop. So this is Matt's post over here, 4 weeks. And you can see he gives you a key takeaway and you can go ahead and read some of the content and what the significance of this Celestia airdrop is. So this is the kind of content we do create at Collective Shift. And if you stick with us, you'll be able to get some airdrops for yourself. And of course, make sure you check out the airdrops page that we also have. So yeah, this is some pretty good stuff, Matt. Thank you very much for really highlighting that. And I'm happy to say I got the airdrop myself. Did you get an airdrop, Matt?
Yes, all three of us. I'll tick that one off, which was nice.
Very, very nice. Very nice. Now, thank you guys, my friends. Let's talk about what I found positive or at least underappreciated in the market this week. It is the green candles and the green sentiments that we have in crypto so far. Bitcoin is up 10% in 1 week. That has not happened in a very, very long time, my friends. I'm sure you can look it up if you need to. Other projects that are really like foundational to crypto functioning, like Chainlink, which is an Oracle service. Chainlink is what allows DeFi to work and to know what prices are actually what they're supposed to be. That token itself is up 40% in the last week. That is incredible. This sort of stuff does not happen in a stock market very often. So it's been a welcome sight to see some of this green candle action in the crypto market. And it's really a focus on the fundamental analysis we do at Collective Shift here. We're always very heavy on fundamental analysis and making sure our members receive the best value that they can. So yeah, that's what I found underappreciated in the market. Fundamental analysis just prevails over a long period of time. It's the best thing I've found in my crypto journey. And with that said, that's it, my friends. That's a wrap for this week. If you're looking for more insights, you make sure you check out our revamped weekly Shift newsletter. Provides free weekly market insights every Friday, my friends. Subscribe at collectiveshift.io/newsletter. That's collectiveshift.io/newsletter. We will see you next week.